I hope you're doing well. Welcome back to my diary. If you're new here, in this space, I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep learning from the market so that I can share with you so that you don't commit the same mistake. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. In today's video, I know so many people has been asking me to do a a sniper entry, and this is your video. So you have to watch this video until the end. This is GBPJPY. I want to do an entry video so that at least you can be on the same page because I keep on saying this is how you analyze the market, and finally the day has come for me to show you how I always enter the market. Coming to this GBPJPY. This is 4 hour. You can just go and watch the video so that you can follow up with that pair again. Coming to GBP on 4 hour, you can see this market, it has been ranging. You can go to daily, weekly, and you can just go and see all those things. But this is not about analysis, it is about the entry video. On 4 hour, we are using support and resistance. Why I keep saying support is where we are supposed to buy the market, while resistance is where you are supposed to be selling the market. And when I go to 1 hour, because I keep on saying lower time frame, they are used for entry. Okay, let me just draw a simple diagram here so that by the time I'm going to the live chat, you can understand what I'm trying to show you. This is a simple way of saying this is a resistance. By now, you should be familiar with support and resistance. And this one is this one should be our support. So the market is coming toward this way. After the market buying for so long, now the market is around this support. It can be no, the market is at resistance. The market can stay for this resistance for quite a period of time, depending either the market with the volatility of the market, if the time the session that you're trading the market, if it is right. But at the end of the day, if the market the buyers don't break toward the upside, then the sellers will push the market. And now for us to start entering the market, and in this case selling the market has to be at resistance. Okay, that is step number two. Step number one. Step number two, we want to see patterns. A simple pattern that I know people know. We want to see a pattern that is called an M, or you can call that pattern a double top because it has two tops touching toward the upside, and the second top it failed to break toward the upside, or it doesn't. It comes around the same area the first top was, and it drops down. Then you have to wait for the market to retest. Then you can continue doing what? You can continue selling the market. But remember, not all the chart they will give you a clean chart like this one. This is just but a diagram. So you are told you have to wait for the neckline to break. But if you have a chart that is not giving you exactly a chart like a diagram like this one, then if you are that much daring, you can enter even from the second top. But just be careful because sometimes you might think that the market want to continue selling, but you find the buyers coming in and breaking toward the upside. So you have to be careful. That is why we are always told most of the time. That is why we are told most of the time you have to wait for the neckline to break and come and retest. Then you can enter the market. And remember again, if you have a very high news, sometimes even if this neckline breaking, you may find that the market will not give you a chance to enter the market, or maybe the market may not even retest. It can just come directly to the TP. So you have to be familiar with how this chart are formed. But the moment you now have that information, you know how to apply them. Okay. Another pattern that we want to see a pattern that is called head and shoulder. In this case, this is how the head and shoulder looks like. And again, we are just told you have to wait for the neckline to break. When the neckline has already broken, you have to wait for the retest. Then you do what? You enter the market. So you have to wait for the neckline to come and break. Then you can enter the market. But in this case, when you go again to the lower time frame, you'll see this pattern happening time and time again. Unless when you have very strong news, sometimes you'll find the market not retesting. So it all depends. But the main aim for us using this pattern so that our stop loss can be a bit small. Okay, and again, the reason why we want to see the market coming to retest it is because we want to see our market creating what, a new lower high, because the moment the market breaks this neckline, it simply means the market has shifted and it has created a new lower low. Now we want to see the market coming back, creating a new lower high, indicating that the buyers don't have the momentum. Then we have to enter the market. And how do you enter the market? We want to enter the market with a red candle. Remember, we are selling the market. The opposite, it will be a green candle. We want to see a red candle like this one, and in this case the red candle should be a bearish candle. We don't want to see a small candle. Yes, we can have rejection candle, but a perfect candle is a bearish candle. This is a good example of a bearish candle where it indicates that the sellers are fully in control of the market. And when I say a bearish candle, it can be an engulfing candle. And when I say an engulfing candle, this is what I mean. You see, this is if you find a green candle, if you find a green candle like this, you cannot enter this market. Even if the market it is retesting and you have a green candle, you see buyers can still have the power to do what? To push the market and continue going up. So we want to see a red candle engulfing, covering the whole of this green candle. It can be another small red candle, but we want to see a big candle like this one, covering this green candle. And now we have all the confluence, because at least we have a double bottom, no, a double top, or we have a head and shoulder. And the last thing, the market has already broken our neckline. It has come to retest, and now it has already given us a red candle. Even if you don't find these two patterns, the last thing that you have to see in the market, sorry, in the market indicating that we have to buy the market, you can find that the market sometimes on the lower time frame, it is ranging around this area. This is still on 1 hour, 15 minutes, 30 minutes. You can find the market is ranging in this area. You cannot trade this kind of a market, especially on lower time frame, because the market is ranging. So what you have to do, again, you have to wait for the market to break toward the downside, come and retest, and you apply the same what? The same knowledge that I've already shown you. So you have to wait for what? For our market to come and retest. And when the market come and retest, then it is our work to do what? To enter the market. You see? So you have to ensure at least you find these three patterns. If you don't find the first pattern, ensure you find the second pattern or the third pattern, then you have all the confluence. So I really hope by now you have already done what? Ensure that you have already seen any of these three patterns, and then now we can go to the real market and see what is happening into the market. Coming to this chart now, this is GBP JPY, as I've already said. Coming to the lower time frame, we want to see the market being at the resistance, which already the market is at resistance. If you don't, we want to see the market breaking at our resistance, then going toward the downside. If you don't have a clue on what the market is doing using the candle, you can always use what? You can always use the line chart. And when you come to this market, what do you think is happening to this market? This is the 1 hour chart. You can say the market the first time is it created a double top, but again remember the market came again but failed to break toward the downside. That clear. You can say again that we have a head and shoulder. So at least we have all this pattern in one. We have this one. Can you see this one? This is a good example of a double top. Can you see? This is a double top. The market did not break the double top. If you don't see the double top, you can say the market is doing what? The market is ranging around this area. If you can't see the market is ranging around that area, then you can say the market created what? A head and shoulder. You see? This is another example of a head and shoulder. Remember, it will never be as clear as you want, but if you have the information, then at least you know how to apply that information. And if you have all this pattern in one, what do? You can see the market has been ranging around this area. Can you see it clearly? The market has been behaving around this area. Let me put it a bit color so that you can see what I'm trying to say. Can you see how the market has been reacting? The market, yes, it is at resistance. Remember, using the line chart, you'll never see the wicks. But when you go to the main candle, you'll see the wicks coming around this area. But because you're using the line, you cannot see the wick. The line will never show the wick. It only show where the body of the candle did what? It did reach. And I've said, if you find this kind of a pattern, step number three, you have to wait for the market to do what? You have to wait for the market to come and break, retest, then enter the market with confidence, knowing that what? That our market, at least it will go to a direction. And the big thing that the market can either do is only go up, and we are good to go like that. So before even you go to entry, let's go to the chart, to the main chart, to the candle, so that we can see if everything I'm saying is correct. This is 1 hour again, and we are combining 1 hour, 30 minutes, 15 minutes for us to get the best sniper entry. You can see the same thing I'm telling you. You can see this is a consolidating market. You can say, no, this is a double top. No, this is a head and shoulder. All those patterns, they are indicating for us we want to sell the market. And now we want to do what? Enter the market. You can see the market here, the sellers came here, they broke, indicating they have already created a new lower low, and now we want to see a new lower high being created, indicating that the buyers don't want to push the market further toward the upside. Now, then we can now start looking for the red candle to do or to enter the market. The reason why we want to see the market is retesting, it is because if you want to say, if you don't wait for the market to retest, there's a chance the market could still go up. But now the market is most likely to come toward this area, because again you can see this area, it has been tapped more than how many times. We have this first time here, here. So at least this is quite a small mini support and resistance, because whenever support is broken, it becomes resistant, and the other and the vice versa, it is also true. So let's go to the 30 minutes to see now, can we find a bearish candle, because we already followed all the steps. Now we want to enter this market. Can we find now a red candle indicating for us now it is time for us to enter the market? After the market going up again, can you see this is a very good example? It is a very simple example to follow. Even if again you go to 15 minutes, it is still the same thing happening over and over again. Market coming down, retesting. This is 15 minutes. Market coming down, retesting. You can call this one another form of a double top. And we just want to see a very good red candle indicating that we want to enter the market. And if you find this type of a red candle showing now that it is time, the market has already rejected toward this resistance. Now it is time for us to enter the market. What are we waiting? We have to go to enter the market very confident, knowing that finally all our criteria has already been met. And remember, our stop loss should always be below the last high that has already been created. And in this case, this is the last area the market was before it started to do what? To go down. And after entering the market, now you have to go to the higher time frame, like the 4 hour daily, and check where the market is most likely to go and breathe, or maybe retest before it continue doing what? It continue going toward the upside, or creating high, because remember, I keep on saying the market will never move on a straight line unless we have major news. And major news, they don't happen all the time. So at one point, our market, the moment it comes break toward the downside, it comes up again. So it has the power, it has the chance of doing what? Of creating high and high low. And that is why at the end of the day, you realize the market has been going up and down because we have sellers in the market. But that is a very good example of how to enter at the market, and we have a small stop loss, and our TP should always be toward the next zone. So for you to know that the market now will continue going downward, because the moment the market comes break like this, it will always go down, create a new lower low, then it goes retrace, create a new lower high, and that is how the market will always move. And when the market again comes toward the downside, now where the support is, then if they fail to break again toward the upside, the downside, we repeat the same process. You have to ensure, do I have a red candle? Do I have a pattern that is showing me to sell? Now you can see this market, it has already played so well. Like, can you see the market has already played so well? And through around 100 pips, I don't know how many pips are this one. Let me see how many pips are this one. From where the market started to go down, creating lower high and lower low, you can see the market went for how many pips? 150, 160 pips. Those are good pips, and your stop loss is only around how many? Our stop loss is around 40 pips because we are not scalping. So this is more of swing trading where you have to hold the market, because we keep saying the market, if the market has moved from support, it will always go to the next zone, and the next zone is resistance. And at the end of the day, can you see how that market has already moved so well? There was no a lot of pressure, and you can confidently hold that market, because the worst thing the market can do is do what? It is just break toward the upside and tell us that our setup was wrong. But most of the time, if you follow what I'm just trying to say, like even if you get like 5 trades out of maybe 10, even if it is 8 trades out of 10, you are good to go. You don't have to trade like 20 pairs, but if you just get one trade in a week, a trade that is giving you all the criteria that I've already shown you, you are good to go. And at the end of the day, you can see the market, it went to the support and now it is buying. If you already applied the same knowledge, now you are holding the market, waiting the market to come around this area, or even to come again to where the market came, unless we ever find this market breaking toward the upside. Now we know, okay, the market is not ranging. And remember, you cannot trade inside the range. Like, you cannot enter the market when it is around this area, because if you enter the market when it is around that area, where will your stop loss be? Can you see? Your stop loss is so much big. So that is why you have to be patient, wait for the market to come to the support or resistance so that you can enter the market, and you wait for the market to retest so that you can enter again the market. It is not about even entering the market. Your stop loss, it is it matters a lot. So I hope I've done a detailed video about how to enter the market. Ensure the market is at resistance. Ensure at least you have three patterns. You have a double top, you have a head and shoulder, or you have a consolidating market. Then wait for the market to break, come retest. Some market will not come and retest, but you have to adjust to know when to enter and when to exit. Then after entering the market, ensure you have a red candle that is engulfing the other candle. Then you can use the 30 minutes and the 15 minutes, and your TP, so your TP should be at your next zone. Your next zone is where the market is most likely to go. You can use the 4 hour, the daily, and at the end of the day, then you have to be patient with what the market is doing. So if you want to join my class, feel free. I do offer online classes from Monday to Friday. Charges are $200 if you are not in Kenya, but if you're in Kenya, that is 26,000 Kenyan shillings. And we have to catch this setup most of the time so that we have to practice whatever you know. So you can just WhatsApp me. I keep on saying my WhatsApp number. Let me write for you my WhatsApp number. If you don't know my WhatsApp number, that is 0720 515 330, or you can just find, I have my number is all over. Just go and find my number and we can talk more about the classes. So thank you so much. I really hope you've understood whatever I've said. And until next time, bye bye.